live in the group here, so let's get going. As I said, in my opinion, Andrew is best positioned, or one of the best positioned people to be answering these questions. He's got some exciting news today, I believe, as well. But in the first 24 hours of this new bounce back scheme, I'll sometimes get mixed up, so correct me if I'll get mixed up between the bounce back and the CBILS. But in the first 24 hours, £2 billion was applied for. Was it actually released as well, Andrew? Do you know? Or
the vast majority has been released, yes. I mean, there's shall we say, the banks are running faster than they've ever run before to release money out their doors. And
wow.
If you look at the big round picture here, 2 meters social distancing. So they're having to work from home to achieve this. So they're having to dial in remotely. They've also got members of staff suffering with COVID-19 and the effects of and so forth. So that's putting them under more stress. Banks are actually working 7 days a week, extended hours, in order to write these loans and get the cash out the door and go through all the sign-off and mandate procedures needed internally for them. And I can say that as an ex-banker.
Yeah. Well, guys.
Banker.
Yeah, banker. Don't misinterpret what he just said there, guys. But yeah, leading on from that, this is why I feel Andrew is the man best position. Well, one of the best positions. I don't want to sort of offend anybody else. This is why I was turning to him, because he's got a background in banking, accountancy, in law. He's a prolific entrepreneur, guys, and he does the developments, property businesses. He's really well positioned to give you inside understanding and his opinions. Remember, guys, some of these things are opinions, not facts. Some of the things are facts. He's a very well researched guy, but some of them I'm going to ask him his opinions on it, because some people are talking about the ethical side of it, what it should be used for, but we'll go into that later on. And the guys on All About Property, we've got a set amount of time. I'm respectful of Andrew's time, and I'm going to ask as many of the questions as I can from you within the time allotted. We've got a few things we're going to discuss first, but we polled it yesterday, so we'll get them top poll questions asked in there. And anybody else got any questions, fire them in, and we'll either try and answer them now, or we can jump back on and answer them later on. So, yeah, I think this is going to be very, very exciting. Andrew just this morning gave me news that he's got some exciting new changes and some developments that could possibly blow our minds. Him telling me that actually blew my mind. So I'm going to hand it over to you, Andrew. Tell us about what these new updates are, what's happening and what's going on then. I'm excited to hear it.
Well, thank you. And thank you for such a generous introduction as well. I mean, I'm lost for words. Thank you. Thank you very much for the warm invitation to your channel as well.
Thank you for turning up.
Well, the first thing I'd like to sort of look at, I mean, as a UK economy, we prepared ourselves last year for a Brexit stress test exit. We did a doomsday scenario, and you might remember the newspaper headline, property prices to fall by 35% as a result of Brexit. Well, actually, no, that was one of a number of scenarios that the Bank of England, the government, and all of the central policymakers basically were stress testing the economy under a doomsday scenario. And as a result of that, that led to the Bank of England basically saying to some of the key banks, well, all of the banks basically, this is what we need your balance sheets to look like, and these are the reserves we need, and this is how strong we want you to be. Now, that's brilliant, because you show me, did America do that last year? Did Europe do that last year? No. So are their banking systems as well prepared as ours? Given that pretty much, if you monitor exchange rate changing between countries, that is the monetary flow and the risk factor interpreted between country A and country B. Now, when we started writing all of our support package, America hadn't announced anything, and we were ahead of Europe. And what basically happened is the pound dropped. Then the pound bounced back as everybody else wrote their policies. Now, as we unwind and go forwards, what you will notice is the pound will strengthen, because our banks are stronger than other banks. And part of the robusting of the banks was, we need you to basically put more reserves on. So you'll have probably noticed if you were watching the property sector last year and this year, and if you look at the Allsops auction, for argument's sake, there are 8 commercial premises, which are bank premises, up for sale in auction 2 weeks' time. That is all to put cash on their balance sheets to shore up their reserves, to strengthen the banks. Now, that doomsday scenario test, it looked at a number of things. Property prices, I mentioned, they ran a number of tests on. It looked at interest rates. Well, guess what? The Bank of England government control that, so they can make that figure whatever they want, and lo and behold, it is. They've put the banks into good shape. They can't control unemployment to an extent, and that was one of the factors in there. They also can't control personal cash flows other than through taxation and wage growth. So what has happened? Well, we've had a scenario happen, which is COVID-19, coronavirus, sorry. And that is effectively a Brexit doomsday scenario on every economy and on every banking system. Now, ours is able to withstand this, but can the US, can Europe, can Asia withstand it to the extent that we can? Because we've readied our economy and our banking system for a doomsday stress test. And what I would like to sort of give you is now a sort of 6-point leading to Q&As, and this will, if you've got questions, drop your questions down below on either the YouTube feed or the Facebook feed.
Yeah, guys, drop
and we'll handle them. Because I'm now going to perhaps challenge you a little bit and make you think a bit.
Excellent.
Because I often describe to this as a ski slope, where we go down a slope very quick, we get to the bottom, and then it's a slow button lift back up.
Yeah.
At the moment, things are going to happen like a series of stacked dominoes. And you're not going to be able to stop these dominoes falling over. If you've ever done that as a child and you've stacked all the dominoes and you push one and they all just suddenly go, that's what's going to happen now. There's a chain reaction. As investors, as business people, as entrepreneurs, we can't fight it. We can't stop it. We have to use it. And the way we use it is to understand it. Now, if there's a knife dropping through the air, like going down the ski slope, you don't try and catch a knife because you're going to hurt yourself. So if you understand the core principles here, then you can avoid catching a falling knife. Now, let's look at this with another analogy, and you'll find out I love my analogies.
Yeah.
We're going to drop a stone in a pond. As you drop a stone in a pond, there's a series of ripples. You know those ripples are going to go out. Therefore, between the point of dropping the stone in the pond and it getting out to the end ripple, there's a lag. Now, with the lag, you can actually predict where those ripples are effectively going to be over a period of time. So COVID-19 is that stone dropping into the pond.
Andrew,
and it's going to have...
Quickly ask you something. That stone, do you think that's going to start in London? Sorry to interrupt you there. It's really interesting. But do you think that stone's going to drop in London, and like the ripple effect from everything in the property market, that is? I think this will be relevant for everybody. Do you think that ripple effect will steam out from London in the property market?
No, I don't. It's a national thing, this is. It doesn't have borders. It doesn't have geographic areas. This is affecting people across the whole of the UK.
Okay.
So it will affect everybody equally, with the caveat that certain markets are stronger than other markets. There are certain regional markets. The sort of West Midlands area has actually been bucking the trend for a while. Now, will it affect the West Midlands area? I'll go into that when I go through the detail as to how I think it'll impact, and then you'll see where I'm coming from and why I say it won't necessarily affect all markets equally, but it will affect everybody. So the COVID-19 is the stone, it's dropped in the pond, the ripples are coming out. As the ripples are coming out, this is going to have an effect in a number of areas. Now, it could have had an effect on unemployment, and it was. Immediately it was announced. I had some members of my team whose family members were made redundant by their companies because they were protecting their cash flows, because they could see that this was going to be leading to a lockdown. Therefore, unemployment did peak a little bit. Now, in order to stop that ripple happening, what the government have tried to do is effectively put a barrier in the way, and they introduced government stimulus. The first one they introduced was the furlough to limit the effect. And what they did was also said, if you've made somebody redundant from the 1st of March to the 19th of March, you can rehire them and put them on furlough in order to reduce that lag.
Yep.
So the government, we as business entrepreneurs are unable to affect those ripples to a great extent. It's strategic national policies that are going to affect it. And we're on a little island. You know, I talk very positively about the UK, but we are affected by the trade winds that blow off our shores. And because we're affected by those trade winds, although we can robust ourselves and we can be strong as a nation, things outside of our control, off our shores, will have some dampening effects on that. So the government then introduced rent deferrals. They then that was both for residential and subsequently for commercial rent. They introduced CBILS, the Coronavirus Business Interruption Loan Scheme, and the Coronavirus Large Business Interruption Loan Scheme. They then introduced business rate grants. They introduced VAT deferrals, income tax deferrals. All of this was needed basically to prop up businesses to stop them going bust. Because if businesses went bust at this point, unemployment would spiral upwards. Modelling the doomsday Brexit scenario, or modelling what happened this week, which was the COVID-19 doomsday scenario, where they're predicting, 16% fall in property prices. No, they're not predicting it. That was the worst case model that they used. So they predicted a sort of 1-2% fall in real estate, 5, 10, 50, and so forth. So they've run a number of different models. And the press basically loves to grab a headline because property prices going up, property prices stagnant, doesn't actually sell newspapers, doesn't actually get you eyes on onto their channel. What gets you eyes on is property prices falling 16%. That gets you eyes on. And because you got eyes on at that point, you go, oh, hang on a minute, I'm really interested here. I want to read more on that news story. So people will focus on dramatic statements that are made, and newspaper editors, news channels will use those to pull you in. Now, as well as all of those business rate grants and furlough and income tax deferrals, all of this is designed to prevent unemployment happening. Now, it's going to prop up businesses, but I predict there will be a belly flop, and I'm calling it a belly flop. It's not going to be a recession, it's going to be a belly flop. And the belly flop will be next year, 2021. And why can I predict that with reasonable certainty? Well, my VAT is deferred till next year. My income tax is deferred till next year. My first BBLS loan payments, COVID-19 payments, CBILS payments are all due next year. So at the moment, the government have done a really great job of creating a massive feel-good factor for us. Inside here, we feel good. If Rishi Sunak had come out and went, tell you what, on your next tax bill, I'm going to knock 5% off your income tax. You're going to go, great. Because you've got a BBLS and you've got a bucket load of cash in your bank account, you're sitting there going, I've got cash. I'm brilliant. I feel good. Whereas saying I've got 5% off my next tax bill that is 12 months time after my year, or 9 months after my year ends. My year ends 12 months away. Woohoo! 21 months time, I save 5% tax. So he's creating an instant feel-good factor for entrepreneurs who are going to get out there and make Britain great because they've got bucket loads of cash to do things with. Now, it's controversial of me to sort of use this contentious language, but number one, if you agree with me, put a comment below. If you don't agree with me, tell me why. And I will help you understand my logic as I go through. So you can see why I'm predicting a belly flop. That belly flop isn't just going to happen in a business environment, but people have had rent deferrals. People have had mortgage deferrals, or in government terms, holidays. They're not holidays, they're just deferrals. Those are going to have to catch up. And what you're going to see happen between 4 months' time from now, which is when we're asking people to catch up those payments, they're either going to do a bunk, leaving the landlord carrying the bill of no rent, and only just able to consider starting to file Section 21s or Section 8s to get people out who are not paying and all that sort of trouble that's going to come. Or on the mortgages, they're going to start to go into an arrears process with the lender. So between 4 months and 14 months, we're going to see an accumulation of arrears happening, and that's going to link in with businesses, VAT, income tax deferrals, and so forth, and first BBLS payments. We're already seeing a few companies, Virgin, Ryanair, laying staff off and basically saying, look, I know we've got the furlough, but actually we're going to change our business model. We don't think there's going to be as many people flying, so we're going to actually make those people redundant now and put the pain out there. So that is going to happen 4 to 14 months. What you're then going to see starting to happen around about 12 to 24 month window is repossession growth. And that repossession growth is what's going to start to really get exciting for people who are investors and who are in the property sector, because that is where the big opportunities are going to start to come. The bank repossessions will be starting to take place. The banks are actually going to go back to the 90s, when the banks actually owned the real estate to all intents and purposes. Okay, it was under a deed of trust, they owned it, it was still yours, but they were managing it, selling it. If it's commercial real estate, you could find, I won't name them specifically, but there are large commercial real estate operators who run shopping centres, for example, and they've been under financial pressure for a while. And they've got about 4 months worth of cash flow. Now, the government have said that commercial operators, lease operators, can defer their rent, and they can defer those rents for up to 6 months. Well, that puts them into difficulty with their lenders because they haven't got the cash coming in. And it's the major blue chips that have actually been asking for these deferrals. But not only are they asking for the deferrals, they're asking to come back to the table and renegotiate the terms on the lease as well. So it's double paying for commercial leaseholders. So what will probably happen is the banks will take over the real estate. They will operate it for a while through administrators, and then that will be sold out to market at a deep discount. And the bank will effectively be writing down those assets. In the residential marketplace, they will be looking to control those assets and push them out again through auction or fast disposal processes. So if you're in the market and you're looking to buy real estate between now and 24 months' time, there is a knife that's falling. Do you want to catch that knife? Do you think you'll get hurt? Do you think as you're going down, you'll catch the knife, but then you'll end up with real estate that's worth even less than it is now? Now, the final piece in the jigsaw is inflation, because all of this, effectively as an economy, we have created a lot of cash, which has devalued the pound. Now, because the pound has effectively been devalued, you'd expect our exchange rate to fall. Well, it hasn't really fallen. There was an initial fall when we wrote the rescue packages, but then if you watch, say, the Americans, they wrote theirs, and the pound bounced back against the dollar. And what you've probably noticed is a new normal level for exchange rates, which is, well, your economy wrote a bit more cash than ours, so we will discount yours a bit more than ours. So new levels for exchange rates have been found. But what's effectively happened is the pound and all the other currencies have been devalued. And a controversial one is, will we be paying that cash back? Well, have we actually paid the cash back from 2008? There's an interesting one. I don't believe we will be paying this cash back. What we've effectively done is devalued every pound that you had in your pocket pre-COVID. So the red arrows have just flown over outside my window. What an awesome sight.
Oh, we don't. Much like don't bump into what's name behind you.
Yeah, sorry for losing track there. They were on smoke as well outside the window. That was really quite nice. So the pound has effectively been devalued, and now your pound is worth less. So what we're going to see is an element of inflation. And in order to protect the pounds that you've got in your pocket, you need to invest that in some form of asset that is not a depreciating asset. For argument's sake, don't buy a car off the forecourt of Ford or Vauxhall or other motor manufacturers exist, because they go down in value the day you drive it off the forecourt. Look for appreciating assets in order that your wealth does not decline in line with the inflation eroding your pounds. Now, I'm a super optimistic person, but I'm expecting this lag to happen, and I'm expecting it to filter into the cycle. And as we all know, a good friend of mine is David Cloughton. He does a phenomenal talk on property cycles. We did the launch of his COVID-19 property cycle a week or so ago. And, you know, it's now all about working out when the right time to buy is. So that's my analysis. That's my sort of update on the market. Where do you think we're going from here? You know, I mean,
it was interesting, but saying before my thoughts, I'd like to ask you, I've got so many questions now, I've made notes of it through that. So before
I'm sure the audience have. I can see on the YouTube feed, there's a few questions coming through. I'm sure you have on Facebook. So if you've got the questions, post them now.
Yeah, post them in. I'll try and catch up with them, guys. I'm not going to be able to catch up across all the screens, but I'll catch up with the questions afterwards, and I'll tag in Andrew, and he'll be able to answer them as well. But one of the questions I had off of what you were just saying now is, do you think Brexit then has left us actually in a stronger position to handle this? Because the plans we made for Brexit and everything, do you feel we're stronger as a bank to handle this better? But also, you think we're stronger as a bank then, like than the other countries because of Brexit, direct result? Is that what you were saying with that?
Absolutely. Absolutely. We are in a much stronger position than we were had we not gone through all of that stress testing last year. Now, there has been a lot of pessimism about all of this, and the pessimism, some of it is justified, but let's go like this. Nobody knows. I'm sitting here and I'm polishing my crystal ball. I don't know the answers, but what I can tell you is if you look at factors and you look at triggers, and going back to what I said about history leaves a trail of clues as to what will happen for the future. And we can't fight what's going to happen, but we can use the strength of the predictions of what's going to happen to benefit us. So that's where I come from.
One question I'll ask you on that, because I'm a massive fan of that history predicts the past. And one of the guys I like following is Ray Dalio and his predictions on the ways to work. And I've been following him quite a bit in this crash of the overall economic cycle of what's going on. But the past, the only one he was saying, he might have updated this since, but he was saying like is the real big one in 1930s, because there's a massive inflation. We've overbubbled, and especially with the baby boomers at the moment and the house prices. Where do you think it's going to take that? This is a little bit off of subject, sorry guys, but where do you think it's going to take that? Because to the baby boomers, owning a home was really important, but to today's millennials, it's not been so important. And the prices have got inflated, and there's some over-bubbled one. Robert Kiyosaki was saying as well, another guy that was following, saying that this bubble of where we're at with the money that's been kept on pumped in, and have we recovered from 2008 and paid that money back, all this money pumped in, is this going to be the breaking point to like a reset? Because this is such an unusual like recession or wobble or belly flop, as you called it, because the previous ones, not every shop shut down, not everything shut the same as it did today. So can we get a full prediction from the past, the same as we did? Or what past would we predict that to? Would we predict that to the big crash like in the 1930s? Was it the 1930s, I think? But yeah, that's my question now.
Yeah. Well, firstly, I would challenge you on the use of the word recession.
Yeah, not recession. I couldn't think.
We talk ourselves up and we talk ourselves down. Yeah. Now, I'm an entrepreneur and I'm a very optimistic person. And it's the press who set the tone and the message.
Absolutely. Yeah.
Now, if the press are going, oh, we're going into recession, subliminally, those people who do not look at the bigger picture and do not look at the strategic macroeconomic things will believe the press, because the press are always right, aren't they? I personally, I don't have a TV and I don't watch the TV and the news because it is so negative. I do follow business news, I do follow politics, and I do follow economics, but I monitor carefully my input, so I'm not taking in, oh, woe is me, hype stories which are full of fluff. To me, it's about factual data. And I look at things like the RICS data. I look at Bank of England reports. I look at stuff that comes out directly from .gov.uk, because those feeds are feeding you as it is from the source, without the waffle and the fluff and the spin that other people put on them. And that way you draw your own analysis. So again, if you're watching this, don't just take my word for it. Go and use those as valuable sources for your own data feed. So that's me challenging you, saying recession and not recession.
Well, I wasn't sure what that's a word. It's a belly flop. So you think it's, because I don't know, as I said, like it's such an unpredictable one from the past. So you feel it's going to be a belly flop, not a full-blown recession?
Yeah, I would predict it as a belly flop, where there are certain things that are happening, and there are businesses now that ordinarily might have struggled this year, but because of the various changes, the cash being pumped in as stimulus to keep businesses alive now, those businesses that may have flopped in, say, September, December this year, have got a lifeline to carry themselves through. But then when the deferral of all this other stimulus has to be paid back, that is when we will actually see a spike in administration, a spike in insolvencies, because people are having to pay that money back that they've been given.
So this is one of my other questions as well. Do you think, I feel sometimes a sweet success sometimes makes us feel we've arrived. And you know, it's like if you're trying to get in shape, when you're in shape, you sort of take your foot off the gas sometimes. Do you feel this will create a lag of people taking their foot off the gas because they've got a big lump of money in their banks and cause a ripple in turn problem off the back of that? I do it sometimes. I do really well in my businesses. I think everything's going well. I think I'm the king. And then all of a sudden, 6 months later, I'm like, oh, I better pull my finger out again because I've not been pushing quite the same. Do you think this will danger of that is happening?
I think that's human nature. I think that's human nature, and people will suffer from that. A lot of the vast majority of people, and I say that in a really nice way. Those people who know me really well, and you've been messaging me, and we've been messaging at what, 11 p.m. at night, and I'm up at 5 a.m. and I'm messaging you back after we've finished at 11 p.m. and people are going, "Do you not sleep?" Since lockdown, I've generally been doing sort of 6 a.m. to 10, 11 p.m. days, 7 days a week, because there is that much happening. And I'm a sponge and I'm absorbing all of this through osmosis, and that's helping me identify, predict, and communicate in a succinct way, like I did in the 4 videos on the BBLS, to help people out there to actually understand what it means in layman's terms and to be able to benefit from it. So to me, it's a passion. I don't do this, I mean, there's no money in any of this. I do it because it's a passion and to help people who don't necessarily have the time to absorb all the information, do all of the research, and to pass it out there. And that's why I've got the YouTube, and I've got a couple of videos coming out which are similar to BBLS that are going to put a lot of cash in people's pockets quickly and now. And I know you're a subscriber and
Yeah, absolutely.
stalk, shall we say?
Hit the subscribe buttons, guys, and the bell icon to make sure you're notified when these videos are coming out. I've got my bell on. I'm watching them keenly.
So yeah,
more of these questions, Andrew. So where was we?
so what have we got from the audience there then?
One more question before the audience. This is one more question. What do you think? You said there's going to be a knife drop in and buying on the way down. One of the things I do is I buy in the north. I'm in the south. I remote invest and I buy single let properties, which is very unsexy and very unpopular. But I feel there's low protection. If you buy them at 70k and even that knife is still dropping, because you're going to have to buy on the way down at one point. If we had a crystal ball and knew when we was at the bottom, that'd be fantastic. But my view on it is if you buy in London and it still carries on dropping, you've caught a really sharp knife. If you buy a single let property for 70k and it's still dropping, you've caught a butter knife basically, and it's not going to hurt you as much. So you're like the dip of it is not going to be so painful. But
You might lose 50p, I think, is what you're saying.
Absolutely, yeah, but the yield's going to be still great, and you've got a lot of downside protection. I feel everybody should have a single let portfolio as a foundation to then take the risk of our stuff on the bigger stuff. But that's kind of sidetracking. But how long do you think the window's going to last? I think it might be shorter because so many people in these groups, there's more education than there was. These groups weren't here, I don't believe, in 2008. There was forum groups, but not Facebook ones like this. So everybody's talking about this buying opportunity, biggest buying opportunity. So will that in itself push the window shorter in like all these repossessions and the markets, and not create us as big of an opportunity as previous years when we've hit a belly flop?
Great question, really great question. And the way I would sort of approach that is, if I've got a flip chart behind me, which I sometimes have, what I would do, and I'll do it in front, basically what we're talking about is a dip dive here. Now, what you don't want to be doing is catching the knife on the sharp downward. Nobody in history pretty much can predict the bit where you just at that last bit of the bottom and just about to uptick. What it's about is trying to predict where towards the bottom is, and where the bottom is, and where the slight uptick is. And that's the smart bit to be getting in at, is the bottom of that curve. Now, this is what I do. This is what I've done all my life since I was sort of 17. I've been a forecaster, a data analyst, a consumer of data, forecasting, predicting strategic and big changes and impacts that are going to happen. And pretty much every one of them, I mean, I can go back to 18 and show you back when I was 18, I was predicting a mis-selling of endowment policies. And I was predicting a mis-selling of pensions and the annuities linked to pensions back then. Now, all of this has unwound over the years. So when you actually data monitor this and map in human behavior and human psychology, you will be able to identify where roughly the bottoms of curves are. And I will be helping people to understand where I believe it is and when is the right times to pile in and buy.
Even
there isn't a right time.
Sorry to jump in there, Andrew, because I'm really like cautious of the time and let you get going. But how long do you think it'll last? I know about predicting where it's going to be, and I don't mean to be rude there, but how long do you think it'll last? When we hit that first point, when it's at where you think it's right, and when we hit the point where it starts to grow, how long do you think that window is?
Well, my feeling is things are going to be subdued this year because people, valuers, for example, are instructed on behalf of banks to value. And RICS will be sending out a communication to valuers that, look, we predict, like I am, that next year there's going to be a little bit of a belly flop because of these things. So do not value prices what they were this year. I would probably caution prices, no more than 5% down from where they were pre-COVID-19, possibly as much as 10% in certain areas, because there are regional factors affecting different regions. Then when the belly flop happens next year when people are expected to pay their VAT. So in 1 month, they'll be paying 2 lots of VAT. In another month, they will be paying their PAYE. They'll be paying their BBLS and their COVID loan payments back. This is all going to put financial stress on people who will go, hang on, I'll take a payment holiday on the mortgage instead, or I'll take a payment holiday on something. And that's going to cause ripples at that point. So my gut feel is we're going to see a downward slope for a period of time, and probably 12 to 24 months is the window to start actively buying, because there is going to be that uncertainty where it'll be a little series of ripples, but there'll be sort of downward ripples because of factors affecting us.
Yeah, so 12.
But I'm not predicting a fall off the edge of the cliff, 35% fall in prices at all. It's going to be contained and controlled.
Brilliant. It's great news. So right, I'm going to get to some of the questions from All About Property, the groups. These are the main questions they've asked. Firstly was the controversial question, the big like sort of hook, and the headline is it fair to use your, like, to take these loans, especially the bounce back one? Is it fair to take this loan, in your opinion, to grow your business? Or say your business has only been, everybody's been affected by it. There's not one business in the country that hasn't been affected. But some people are saying, if you've still got money on account, should you be taking it to grow your business? So is it fair to take it? Because the government, in my view, the government need stimulus in the businesses. So that's the interpretation I took from it. But some people are saying, look, you shouldn't take it unless you're actually banging trouble as a business and struggling. So that's a big question.
Well, it's an awesome question. It really is an awesome question. And my view on it is, I'm an entrepreneur, and I've got businesses that have been positively affected and negatively affected by this. And Rishi Sunak is giving this cash out to entrepreneurs to kickstart the economy. He's actually using the term kickstart. And what he wants you to do is go out, invest in equipment, invest in people, invest in growing your business, invest in making your business stronger. Because I liken this to a little bit like we're sat on a motorbike, we can rock it backwards and forwards and it moves a little bit, and the economy is a bit like that at the moment. We're sat on a motorbike, it's got wheels, and it will go if we shuffle our feet along the floor, but it's not really flying. So he wants us to use the old-fashioned motorcycle, kickstart with our foot, and boom, off the motorbike goes, because the engine is now flying. Now, this goes back to what I said earlier. He could sit there and go, oh, I'm going to drop VAT 2%. Oh, I'm going to drop your income tax or corporation tax 5%. And you go, well, that's great, and I'll get the benefit of it perhaps in 21 months' time. It doesn't make you feel good. It doesn't inspire you as an entrepreneur. If he puts a bucket load of cash in your bank account, you are inspired to go out there and do good things for the economy, to make things happen, to grow the economy. If the economy is growing, if you're creating jobs, you defer the unemployment. So all of the stimuli measures that Rishi has done go back to what I was saying earlier about the fact that this is a stone in a pond. And we, as little entrepreneurs, can't actually stop those ripples happening. What we can do is influence them. But we need bigger macroeconomic factors to influence them. And that is what Rishi is recognizing and Rishi is doing with his bucket load of measures that he's given us.
Fantastic. Right, I'm going to fly through a few more of these questions. I think we might have to do a second to go a few more rounds of these if you're okay with that. And guys, if you want a second, a few more questions, because we're not going to get all your questions in because Andrew's got another meeting. But if you want me to ask him these questions again and continue with this, because this is a really interesting discussion, we will do, guys, but we just give us a yes in the comments. But one of the questions is, can you lose these loans? This is the biggest one behind that first one. Can you lose these loans for deposit for buy-to-lets?
No, you can't use it for buy-to-lets, but yes, you can.
Right, okay. Yes or no?
You like that answer, didn't you?
Yeah, yes or no.
Simplistically speaking, if I go back to my days when I was working in the bank, what the bank looked at was, I'm going to lend you some money, and let's put it into simple terms. Buy-to-let, simplistically, in a normal market, the bank will go, I will lend you 75% loan to value debt, and you put 25% equity in. Now, one of the things the banks say to you on their application form is, what is the source of your deposit funds, and evidence it. And you turn around and you go, I've got this bit of paper here, and it's a loan form where I got a BBLS. And they'll go, okay, well, that's great. Thanks for getting your deposit. That is debt. Therefore, we'll take that 50 grand if you've applied for the maximum off the amount we will lend you, because the maximum we are going to lend you is 75% loan to value debt. Now, that doesn't have a charge over the property, but they will recognize that as debt. So you will not be able to use it as deposit, in my opinion. They will be looking for you to put equity in to have skin in the game.
Absolutely, yeah. Absolutely. A question from Steve direct was, is this defrauding the government if you do these sort of things? So this leads on to that. This is defrauding the government or us, the taxpayers?
Definitely not. It's not defrauding anybody, in my opinion. Firstly, and the banks are actually extending the detail on their criterion on this and clarifying it. Yesterday, Co-op Bank launched their BBLS loan scheme, and they made a specific statement, and forgive me, I'm going to try and paraphrase what they said, but all business sectors can apply for a BBLS loan unless you were in one of the excluded sectors. A bank, which I find really funny that a bank would want to borrow 50 grand because it's going to make a huge impact to their balance sheet, especially if they lend it to themselves. An insurance company, a primary school, a secondary school, or a public sector body. Now, which one of those sectors says property? Barclays have gone a little bit further, and they've actually said, if you're in the property or real estate sectors doing development, investment, blah, 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 you are permitted. Again, the britishbusinessbank.co.uk website has also expanded out on its criterion. So, are you defrauding anybody? No. Are you undertaking a commercial activity? Well, unless you turn around and say, no, I'm running my property business to make a loss every year, you're running a commercial activity. You're completing a tax return. Therefore, no, you're not defrauding anybody. And my advice to everybody is only borrow the money if you have a genuine reason to use it, if you genuinely want to boost this economy, and if you can afford to repay it. If you take money without being able to repay it or wanting to repay it, then that is fraud. And where the fraud checks, in my opinion, will come in, is they will come in right at the end of this process. Anybody who skips a single payment, anybody who defaults and puts their business into administration or insolvency, depending on sole trader or limited company process, will get investigated. And if there is any thought that you were defrauding at that time and you were lying on that application form, you will be subject to a fine and possible imprisonment. The banks will not pursue anything, in my opinion, based on history, if you were repaying that loan and you were using it for the purposes agreed.
Yeah. So one of the questions I got as well was in the All About Property group was, can you use this to pay back a director's loan? It's quite an interesting one. So if you've got director's loans to your company, can you repay yourself them loans from this bounce back loan?
I would personally not do that. I would caution against it. The criterion that it says there is it's used for business purposes. So if you are taking the money, you must be using it for business purposes. If you're repaying a loan to yourself, is that money going into the business? Is it helping the economy? And is it likely to be repaid or default on? I would advise against doing that. I would strongly advise against doing that.
Yeah, great feedback. Great question, by the way, guys. I'm going to ask one more question, so I'm cautious on your time. We've got loads more questions. As I said, guys, put in the comments if you want to try and get some more questions out of this. I've got more questions for myself for Andrew, so I would like it extended, but he's got another appointment at 11, so I'm going to ask one more question. The definition of groups is one of the questions like was on the application, and even me, I was like, how do you define this group? Because there's two different definitions, and I watched you on another one, but the guys want to know. So if you could explain, is it defrauding if you've got more than one company, and how do you link that? The definition of groups, how they're saying it, sort of thing. So,
well, that's a really nutty one, and I think this comes back to the fact that it's not been defined.
Yeah.
Therefore, which definition do you take? Normally on a bank application form, and I've looked through quite a few historic application forms, mortgage application forms, general loan application forms, and they normally stick one of them little daggers and then one, and then at the very bottom they put an explanation as to what they are. What they've not done is defined what it is. So do you take Companies House and generic law? Do you take HMRC's definition of group or something else? Now, provided you are using this loan and provided you repay it, I'm guessing it doesn't really matter because there's ambiguity as to which definition you use. The only time that you're likely to be challenged on this is if you end up in court on the other end of a fraud charge.
Yeah.
And if you're sat in front of the man or lady wearing the little grey wig, you have to look at this from the perspective of hindsight. So, why did you borrow this money when you're part of a group? Well, my group, I don't have a group because I've used this definition. Oh, well, dear Mr. Bank, why didn't you actually define what the group was? Because you're prosecuting under this definition, but he's using that definition and you didn't make it clear which one. So you have to look at these with hindsight from if you were sat in a courtroom, what definition are you using and what definition are the banks using? Well, the banks haven't actually defined what their definition is. Therefore, you can't be challenged. And to bring a case of fraud, there's got to be clear-cut evidence of fraud in the first place. Now, that to me is quite a difficult one to actually prove.
Yeah, yes, it's a grey area, isn't it? But I think they've set themselves up by not defining it properly, so you're not doing anything wrong, because you just don't know how, they've not given you the guidance to define it, so it'd be hard for a prosecution on that. Yeah. I agree with you as well.
To quote Ranjan, who when he interviewed me the other day, he said, as a child, I used to play in an area and it got a sign up on the wall that said no ball games.
Yeah.
I didn't break the rules. I played badminton there.
Yeah. So yeah.
Now, as entrepreneurs, we are sitting there and we're sitting there saying to ourselves, we're not breaking the rules. We're actually playing within the rules, but we're interpreting the rules because there isn't a straitjacket on us.
And my view on this all the time, when them rules are there to be interpreted like that, if you're using it for the right purposes, if you're using it to defraud it, then it's no good. If you're using it for the right purposes, which the government needs small businesses to prop the country up. It's the backbone of the country, and to keep it going, to get us out of this belly flop, to get us back swimming to the surface again and doing breaststroke like Michael Phelps. I'm reading his book at the moment, so he come to mind. The government need that. So if you're going to use it for right, interpret how you use it. I feel only people is going to get challenges are people that use it wrongly, default on it, and they're going to be the ones in front of them and in trouble for the fraud. But if you use it correctly, put it into your company, stimulate the economy, then I feel personally you're doing the right thing. Like, I'm not going to say I'm 100% right on that, but that's my view on it. That's how I read it, and that's how I sort of take it. Guys, I think I'm going to wrap up here. We're 9 minutes to, and you've got another meeting, Andrew. I thank you so much for your time. Guys, if you want to continue this, I've got a few more questions. There's loads more from the group that was in there. Let us know, and we'll see if we can get something continued with it. But yeah, I'm going to thank you so much, Andrew, for your time. It's been very informative for me. I've made tons and tons of notes, guys. I hope you've been making notes. So important to make notes. Got more questions. I'm going to fire them I'm going to fire some of these questions actually in the group myself to see if I can get them answered. But yeah, thanks for your time. Thanks for spending this on the VE
You're
Day.
very welcome.
I hope you enjoy the rest of the VE Day.
It's been a pleasure. And obviously, we can all go out there and have our 2-minute silence for VE Day. And I look forward to perhaps joining you again on a future conference,
Absolutely.
Zoom call, where we can actually help people steer their businesses in a positive, constructive, safe way. And, you know, if you've enjoyed it, obviously subscribe to the Facebook group, subscribe to the YouTube channel, and you'll be notified of key things, key updates that are coming shortly.
Well,
Thank you, everybody.
Just for my audience, where can they find you? What are the handles for them, places they can find you if they want more information on it?
Yeah.
I advise you guys to find him and check some more of his other videos out. He's got some great videos, 4-step videos on this.
Yeah, well, thank you very much. If you go to YouTube, YouTube has got all of the social links at the top of the menu bar. If you hit the subscribe button, you'll be told of when the new videos come out, and I have a whole series of them. There'll be videos coming out over the weekend, and some of them are about getting money in your account. Some of them are about predicting the economy, and what I shared with you was an insight at the very start of this into a video that'll be coming shortly, detailing where we're going to go. And it's things like that that you need to steer your business. I say to people, this business isn't about property, it's about people. It's about understanding people, it's about understanding the economics of it. And what you'll find is a lot of useful stuff there. So join us on YouTube, Great Property Meet. I run a network meeting of that very same name, and you will get insights into what's going on in my head. And like the background,
yeah,
hopefully we'll take that fear away from you.
So the Great Property Meet, guys. So YouTube, Great Property Meets. All the other handles for the other platforms, if you prefer following it across them, is on there. So find him, check him out on the Great Property Meet. Check out them 4 videos that gives you like the insight into it at the moment. It's very relevant stuff, very important to keep yourself up to date with. But again, I want to thank you, Andrew. It's been really interesting for me. I hope all you guys have found interested as well. We'll go through the questions and see if we can answer as many as we can afterwards as well. So enjoy the rest of your day. Thank you very much for your time. And
thank you. It's been a pleasure, and I hope everybody has got a lot from that. And I wish you all the very best. Look forward to catching up and perhaps doing a follow-up to answer those extra questions.
Absolutely. Cheers,
All the best. Cheers. Bye-bye.